Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories behind corporate filings. And boy, do we have a story for you today. Get ready to break down AT&T's latest report, a real look at what's churning beneath the surface of this telecom giant. So the big news dropped July 23rd, 25. AT&T is putting out its second quarter earnings. And to kick things off, they're showing us a snapshot of their financial health. Now, AT&T is a company most of us know, right? They're everywhere connecting us all, but what does their financial report actually tell us beyond the headlines? Let's dive into what AT&T is trading on the New York Stock Exchange. And we're seeing a lot of different types of stock and debt here. Things like common shares, preferred stock, and a whole lot of notes that they've issued to raise money. It's like a giant menu of how they fund their operations. For instance, they have these notes due in November 2025. These are essentially loans that AT&T has taken out, and they're promising to pay them back. The interest rate is 3.55 to 5 and to borrow money. Then they have another set of notes coming due a month later in December 2025 with a slightly lower interest rate of 3.50%. What this tells us is that AT&T is constantly managing its debt obligations, juggling different interest rates and maturity dates. It's like a giant financial puzzle they're putting together. But it's not just short-term stuff. Look at this. They have notes due all the way out in 2040. And get this, the interest rate on that particular batch is a whopping 7.000%. That's a big commitment over a long period, and it signals how AT&T plans to fund its massive infrastructure projects for years to come. Often these long-term bonds are used to finance big investments like building out their 5G network. Now, the number you see repeated a lot here, 0000732717, that's their central security identifier. It's like a unique fingerprint for this company's filings, always anchoring us to AT&T. And this false entry you see sprinkled in likely relates to a specific disclosure or a checkbox that wasn't marked. Think of it as a binary indicator stating that a certain condition or status is not applicable for this particular filing segment. Okay, so let's get to the juicy part, the actual financial results and data. This is where we see how AT&T is performing, not just what they owe, but what they're earning and how they're spending. The company is giving us the full rundown of their second quarter results ending on June 30th this year. This is crucial because it shows us their progress or setbacks within the most recent period. Now, I know digging through raw numbers can be a snooze fest, but think of these filings as the actual heartbeat of the company. They're not just numbers, they're decisions, actions, and the consequences of those actions. For AT&T, this is about their ability to grow their customer base, manage their massive debt, and invest in future technologies like 5G and fiber optics, all while facing stiff competition. When we look at a company like AT&T, it's not just about the individual numbers, but the story they tell. Are they growing their revenue at a sustainable pace? Is their debt load a ticking time bomb or a manageable part of their capital structure? Are they investing wisely in areas that will pay off down the line? These are the kinds of questions we try to answer by decoding these documents. One thing you'll notice with a company this size is the sheer volume of debt. They have notes maturing in 2025, 2026, and even decades into the future. This isn't necessarily bad, but it means they have to constantly refinance and manage their interest expenses. It's like a perpetual juggling act. They also provide these non-GAAP measures. Think of GAAP as the standard accounting rules, like the rules of a game. Non-GAAP measures are like the team's own stats they choose to highlight, maybe to show a clearer picture of their operations or sometimes to put their best foot forward. It's important for us to see both the officially recognized numbers and how the company interprets its own performance. What we're looking for in these reports are trends. Is revenue growing year over year? Are their profits increasing or decreasing? How are they managing their operating expenses? For AT&T specifically, we want to see how their investments in wireless and fiber are paying off and how they're navigating the ongoing shift in consumer behavior towards streaming and digital content. Let's take another look at their debt structure. These 3.375% notes due in 2034 show that they're locking in borrowing costs for the long haul. This is a strategy to reduce the impact of potential future interest rate hikes. It's a calculated move to manage financial risk. And here's another one, 4.34% notes due in November 2044. The slight difference in interest rates between similar maturity notes can be due to various market factors at the time they were issued. It's a testament to the complexity of managing a vast debt portfolio. Now, looking at the broader picture, AT&T has been undergoing significant strategic shifts, shedding some business units to focus more on core growth areas like 5G. and the expansion of its fiber optic network. These earnings reports are the checkpoints to see if that strategy is bearing fruit. Are they attracting more high-speed internet customers? Is their wireless segment growing stronger despite intense competition? The risks for a company like AT&T are varied. They face intense competition not just from other telecom giants, but also from streaming services and technology companies encroaching on their traditional business. There's also the constant need for massive capital investment to keep their networks up to date and competitive. Regulatory changes and economic downturns can also significantly impact their performance. However, there are also clear opportunities. The demand for high-speed internet and reliable mobile connectivity continues to grow. AT&T's significant investments in 5G and fiber position them well to capture a larger share of this market. Furthermore, they could explore new revenue streams through their infrastructure and technology capabilities. For me, dissecting these filings is about seeing beyond the polished press releases. It's about understanding the underlying financial mechanics that drive a company's success or failure. AT&T is in a transitional phase, and these reports are crucial indicators of whether they are successfully navigating this evolution. The sheer diversity of their notes and securities listed here shows a company that is actively managing its capital structure to fund its ambitious growth plans. So what's my take? AT&T is a company with incredible scale and a clear strategic direction. They are making major investments in growth areas that are essential for the future. The sheer volume of debt is a constant challenge they must manage effectively. However, their ability to secure long-term financing at reasonable rates, as evidenced by some of the lower interest bonds listed, suggests a degree of financial confidence from the market. The key will be their execution in converting these network investments into profitable growth and effectively managing that substantial debt load. They are a behemoth, certainly, but even behemoths need to move with agility in today's fast-paced world. Alright, that's our breakdown of AT&T's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord in the description below for more exclusive content and discussions. Thanks for watching. See you next time.